we also want to go to tier 2 cities because for us it's a very easy entry into some of these geographies, and we find that we can dominate the market very easily. So it'll be a mix of both. I can't give you the exact numbers, but I would say we will still focus on tier 1, but we will also be open to tier 2.
Sure. And just an add-on question to that, there's been an immense focus towards Ayodhya, and UP government has already mentioned about something like Rama Land, right, which is like a theme park. So any thoughts around that? Will we be pitching for that?
Yeah, we've been approached by the UP government to do something like this. We are evaluating it. We have not yet frozen on anything because we are already close to doing something in the NCR region in Noida through the UP government itself. So we don't want to do multiple projects in one state currently. Our philosophy is we want to be in one large city in one state, preferably the largest. So for us, NCR makes the most sense. But we are open to evaluating proposals from the UP government. But I think it's still early days. But eventually, yes, we are open to it.
Sure. And one last question. In a 1.4 billion nation FY23, we saw 33 lakh footfalls, right? What are your projections from, let's say, 2-3 years down the line? Where do you see this number heading? Do we see a doubler in the next 3 years?
Yeah, I think once we have Chennai and Bhubaneswar stable, we easily will add another 1.5 million to it. But this would take about 3-4 years. By that time, of course, we will have other projects also in the pipeline. But again, it depends on how quickly we are able to ramp up footfalls in the new projects. But we are hoping that we should be able to do it in 2 to 3 years.
Great. Thank you so much, and wishing you good luck for the next quarter. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Thank you for the opportunity.
Sorry to interrupt.
Sorry, you're not clear. I can't hear you.
Am I audible right now?
Not really, sir. This is not clear, sir.
Is it better?
Sir, we request you to please use the handset mode.
I just joined back in the queue.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. To ask a question, ladies and gentlemen, please press star and 1. The next question is from the line of Prakhar Soni from Value Research. Please go ahead.
Just one follow-up question on the expansion plans. How are we looking to fund this? Like any plan for debt and equity? What exactly are we looking forward to?
Yeah, it is little too early to take a call on this. So we will be evaluating both the plans, maybe a mix of it or something like that, maybe after the next year. So not immediately.
Currently, our cash flows we should be able to manage the current 2 projects with existing cash flows and cash accruals. But as and when we look at new projects and we sign on any new projects, at that point we will be looking at some debt because we are currently debt free. We have no debt in the books. So we are open to taking some debt on. And then if the projects get, we are able to handle more execution simultaneously, at that point we might even look at equity dilution. But like Saji said, we don't see that happening for at least the next year. Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Vinay Nadkarni from Hathway Investments. Please go ahead.
Yeah. Just wanted to check out, all the Wonderla parks are exactly the same, or do you change based on the customer profile in each location?
Yeah, all our parks are different. We usually tailor to our host city. For example, in Bangalore we have heated pools, whereas in Kochi where there is much warmer, there's no need for heated pools. So accordingly we'll change depending on the the weather patterns and the climate and the local taste. We will change our parks. And we try not to. Our current 3 parks there are commonalities between rides and experiences. But for example, in Chennai and Bhubaneswar, the rise and experience are going to be different.
Okay. And that would impact the ARPUs also?
Not really. ARPUs will be, I mean, I think it's just a mix of rides that we are going to do will be different.
And how do you then increase your ARPUs going forward?
In fact, it should help us improve ARPU because we feel that, we want to create more differentiation between our projects so that if somebody has visited already a park in Cochin, he should still feel like going to our park in Chennai only because the experience are going to be different. So that is the way we are looking at it.
Yeah, precisely my question. What I wanted to check out was, what are the things that you people are looking for? How do you improve your ARPU going forward? Because that is, footfalls are, of course, your marketing will drive. But for ARPUs, what is it that effort you are putting in?
ARPU, like I said, new attractions, one, new F&B and non-ticket revenue options, new retail, addition of adventure park and MICE facilities, resorts. These are all for us ARPU enhancing. And non-ticket revenue for us has always been a focus, especially post-COVID. So these are all our methods to improve ARPU. Okay, last question. Is there any upper resistance on ticket prices? So far, no. In fact, we've taken almost 30% improvement in our ARPUs. If you look at FY21 and FY23, or FY20 and FY24 right now, there will be almost a 35% difference in our ARPU. So we've not seen a huge, we have not seen any impact of ticket prices. But it's also because I think people's preferences for nearby entertainment have changed post-COVID. I think there is a more focus on frequent but less expensive vacations for Indians. I think that is helping us as well. Thank you. Thank you very much.
Thank you. The next question is from the line of Maithili Balakrishnan from Alchemy Capital Management. Please go ahead.
Hi. A couple of questions. Just wanted to get a sense from you on, you had mentioned the capacity utilization is sort of high in some of the places such as Bangalore.
Sorry, ladies and gentlemen, the line for the current participant seems to have dropped. We will proceed to the next question, which will be from the line of Madhur Rathi from Counter Cyclical Investments. Before we take your question, if anybody would like to ask a question, you may press star and 1. Madhur Rathi, you may proceed with your question.
Yeah, I hope I'm audible right now.
It's slightly better, sir. Please go ahead.
Yeah. So I just wanted to clarify, you said 5% footfall growth in our existing parks and 5% from Kochi for the FY25. And what will be the value growth for FY25?
I'm not able to understand.
Not clear. Could you please repeat?
Yes, sir. So we guided the 5% footfall growth from our existing parks and 5% from the Bhubaneswar park. So what will be the value growth in FY25?
No, if you could see our ARPU rate, it's about some 1,256 for the quarter. And if you see for the 9 months, somewhere close to 1,400. So existing park, maybe within that you can just do calculation. And for the Bhubaneswar park, we will be looking at about an ARPU of about 1,000 rupees or something like that.
Okay. And so what is the average ARPU increase that we look on increasing every year?
ARPU increase will be roughly, this time it is about some 15% for the 9 months ended. So when you do the lot of mix in our non-ticket revenue, when introduction of new products in our F&B as well as in the retail segment, this can improve a lot. And then we are trying to improve the non-ticket revenue almost maybe up to 40% of my total ARPU level. Personally, it is about some 25 to 30%, which eventually will improve my total ARPU. So 15% is enough for the time being.
Okay. And so one last question. So what will be the ticket price increase that you are increasing every year?
Ticket price will be some 10 to 15% may increase on a year-to-year basis. Depends on our final decision on the cost of inflation and other things.
Okay. Thank you, sir, and all the best.
Yeah, between 5 and 10% every year ARPU improvement you can expect.
Thank you, sir.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Vinay Nadkarni from Hathway Investments. Please go ahead.
Yeah. Upon getting that resort in your Bangalore plot, what is the kind of revenue growth you can anticipate in Bangalore? And would that also get captured in the ARPU, or will it be captured separately?
Yeah. So the resorts will come as other end. I mean, some of it will come as will be captured separately. We hope to double the revenues from our resort once the new at least double or even more than that. We'll give you more details as the investment is. Right now the investment is only being planned; it's not yet completed. The projections for revenue will be given once the investment, the plan is complete.
Yeah, but that would be kept separate from
more than that.
Yeah, that metrics would be different, right? Footfall ARPU will not apply there. There would be something else that would apply. Maybe
it's called ARR, annual, average room rental, which will have an impact.
Yeah. That would be different also. Okay. Thanks a lot.
Thank you. Ladies and gentlemen, we have no further questions. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you everyone for joining this con call for discussing the Q3 FY24 earnings. We hope to continue on this momentum that we have created in the last 2 years, and we are excited to showcase our expansion plans and revenue potential of this sector. We remain confident and bullish of investing further into this segment, and hope to see you at the next call soon. Thank you.
Thank you.
Thank you. On behalf of Monarch Networth Capital, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.